Good evening. Welcome to STC's educational webinar, Self-Directed IRA Investment Possibilities. My name is Jackie Knight. I'm the Corporate Training Director for STC, and I'm very glad to have you join me this evening. We're going to get started right away with just a bit of information that I need to share with you before I go into the content of the webinar. STC is a retirement plan administrator. We do not provide legal, tax, or investment advice to our clients. We also don't represent or sell any securities or investments of any kind. We're not a registered investment advisor, and we don't represent or endorse any particular investment opportunities. And I will be sharing a number of different types of investments during this particular webinar, but we don't represent or endorse any of these investments. We do recommend that you consult with your legal, tax, and investment advisors prior to making any investment. Now, this evening's webinar is going to begin with a bit of information about self-directed retirement accounts, the benefits of self-directing your retirement account, guidelines that must be followed in all retirement account investing. I'm going to talk a bit about the retirement account LLC structure that STC specifically uses for each of our clients' accounts. And then we're going to go through some different types of investment possibilities. Some are examples, some are actual client investments. I'll review the services that STC offers, and then I'll open the floor for your questions and answers. So first, to get started, I do want to define what we mean when we say a self-directed retirement plan. Lots of folks think they have a self-directed plan, but in fact they may not. A truly self-directed plan means that you're working with a company that permits you to choose any asset that is allowed by law, and that would include what some consider non-traditional assets like real estate. It also means that you manage your plan's investments. So let's take an example. Let's say you do decide to invest in a piece of real estate and you decide that you want to rent that piece of real estate. You would be the one that would make the decisions related to that rental. You would decide the rental rate. You would decide who you wanted to permit to rent your property. You would decide if you wanted to upgrade appliances, and if down the road you wanted to sell that property, you would be the one that would decide the selling price. So you basically manage and control the investments in your retirement account. And because you have that control, you have a little bit more control over how your investments operate and how they might return, what they might earn for you. Now, there are a number of different types of retirement plans, and all of these can be self-directed as long as you work with a company that does self-direction. A traditional IRA and a got ahead of myself there. A traditional IRA and a Roth IRA have some similarities in that they have the same contribution allowances, maximum contribution allowances each year. And for 2016, both of these accounts allow you to contribute a maximum of $5,500 of earned income. If you are 50 years or older, you can add $1,000 to that, making it $6,500. The difference between a traditional and a Roth IRA is whether or not your contribution is taxable in the year you make it. With most retirement account contributions, like the traditional IRA, your contributions are tax deferred. You don't actually pay taxes on the amounts that you put into the retirement account. You do pay taxes when you begin taking distributions after reaching retirement age. A Roth IRA is different. You do pay taxes on amounts contributed to a Roth account. However, when you take distributions from a Roth IRA after you reach retirement age, those distributions are not taxed. They're not included in your AGI. They're not taxed. So what that means is with a Roth account, you pay taxes on your contributions, but as those monies are invested and as those invested monies earn, that account grows. And when you take distributions after reaching retirement age, those monies that you earned in the account are not taxed. None of the monies that are distributed are taxed. So you've actually had a tax-free earning opportunity in a Roth IRA. very different from most other accounts. A SEP is a simplified employee pension plan. A simple plan is a savings incentive match plan. These plans are used sometimes by sole proprietors, small business owners, partnerships. They allow for higher contributions. You're making contributions from the earnings of your business. So if you have a business of your own, you may want to look into one of those types of plans since they do permit larger contributions. And in fact, I'll just tell you, for example, the maximum SEP contribution limit for 2016 is $53,000 compared to $5,500 in a traditional IRA. So it is a type of plan for a business that you may have, and so you might want to look into that if you have a business. I brought out onto your screen 4 different types of plans: 401k, 403b, TSA, tax-sheltered annuity, TSP, thrift savings plans. These types of plans are used by employers. 401ks are usually for-profit companies. 403bs might be nonprofits or charitable organizations. Sometimes governmental agencies, local, state, federal may have TSAs or TSPs. If you participated in any of these types of plans under a former employer, you can take the monies out of that plan and move them into a plan that you are eligible for now, for example, a traditional IRA, and then you could self-direct those monies in a traditional IRA, or a SEP if you had a business and qualified for that. If you are currently employed and are participating in one of those types of plans, you will need to go to your plan administrator. You'll need to go into work and find out who your plan administrator is and talk to them to see if you are permitted to move any of the monies out of the plan into a self-directed plan. Each plan is, each corporate or entity plan is different, so you will need to check with them. Some plans do permit you to take monies out after you've reached a certain age, or if you brought monies into the plan from a former employer, you can sometimes move those monies out. So you will need to check with your current plan administrator on those plans. And then a regular 401k, if you happen to have a business and you have employees, you can set up a 401k plan for your business, and you can set that up so that, excuse me, pardon me, you can set that up so that it is self-directed. One moment, please. I'm going to get a drink of water. Thank you. So as I mentioned, these types of plans can be self-directed if you work with a company that permits self-direction. Now, I should also mention that if you don't have a plan set up, you must have a plan set up by year end, 12/31, in order to make contributions for the current year. So just an FYI, if you haven't got an account open but want to make contributions for 2016, you need to get that set up by December 31st. Now, if you have a plan someplace else, you can always move transfer funds anytime. But if you don't have any plan at all, you do need to get it set up by December 31st to make contributions for that calendar year. Now, why would you want to self-direct? Many reasons. Many people want to diversify and not just be limited to stocks and bonds and mutual funds. So when you have a truly self-directed plan, you can diversify into real estate, mortgages, notes. You can make loans to others, private businesses investments. So you can really diversify the types of assets that you have in your portfolio. As I mentioned earlier, you choose and you control those investments, so you may have more ability to control the profitability of those investments. If you invest in real estate, you can actually increase your buying power by using leverage. In other words, your retirement account gets a loan to purchase a piece of real estate. Now, I will mention here that if you do use leverage in your retirement account to purchase a property, that does bring into play something called UDFI, unrelated debt financed income, which could potentially be taxable to your IRA. I'm not going to go into that in detail here. I do that in a previously recorded webinar that you can find on our website. I go through an example and show how it might still be to your benefit to do a leveraged real estate purchase in your retirement account. But you certainly can do that. There are lenders who are offering loans to retirement accounts. They do need to be non-recourse loans. That means the lender only has recourse to the property that the loan is on. So it's more like a business loan or a commercial loan. But you certainly can use a loan to purchase real estate in your self-directed retirement account. And because of all of these things, being able to diversify, being in control and managing those investments, perhaps using leverage, you may be able to experience a higher return on your investments than you could if you were strictly limited to stocks and bonds and mutual funds. Now, those are some of the benefits of self-directing. There are guidelines that relate to all retirement accounts, not just self-directed ones. So I want to tell you a little bit about the requirements for a retirement account. There are administrative requirements that must be fulfilled. Every year, a valuation of the retirement account must be made, and an annual report submitted to the IRS, Form 5498. Detailed books and records of all of your investments must be maintained. Purchases, sales, earnings, any expenditures related to the investments, all of those transactions must be maintained in detail. State filings may be necessary depending on what you own and what state you own it in. And then in some rare instances, tax returns can be triggered. That would be if your retirement account invested in a business that triggered a UBIT, unrelated business income tax, or used leverage that triggered unrelated debt finance income. Either of those might necessitate a tax return. Pretty rare that those happen, but it certainly can, so I want to mention that. Now, STC is a full-service administrator, so we fulfill all of these administrative requirements for our client's account, with one exception. We are not permitted to prepare tax returns for your retirement account. So what we do, if that comes into play in your account, is we provide you or your tax preparer with all of the details that will be needed to prepare that tax return. So we can't do the return for you, but we can give you all the information so that you can get that taken care of if that comes into play. So those are the administrative requirements. Now, there are some additional guidelines that relate to retirement account investing, in that there are some assets that are prohibited. You may not invest in life insurance contracts or in collectibles. And collectibles are things like rugs, works of art, stamps, like a stamp collection, coins, a coin collection. Collectibles are not permitted. There are also some transactions that are not allowed. Keep in mind that your retirement account is given tax preferential treatment. You're not taxed on the earnings because that plan, those monies, are meant to benefit when you retire. So the transactions that you engage in your retirement account do need to be for the exclusive benefit of your retirement account. You cannot personally borrow money from your retirement account. You also cannot pledge your retirement account's assets to secure a personal loan. That is not permitted. You also cannot utilize your personal credit or guarantee to obtain a loan for your retirement plan. So that's why if you want to use leverage, you must use a non-recourse loan. It is not a personally guaranteed loan. That is not permitted. You also cannot benefit any disqualified person with a transaction that your retirement account engages in. So you may ask, well, who are these disqualified persons? Well, let's just go through a little list of them. You'll see the first person that I bring out onto the screen is you. You and your retirement plan are two separate entities for these purposes, and you cannot do a direct transaction with your retirement plan. And if you are married, that would include your spouse as well. Let me give you an example. Let's say that you personally own a vacation investment property at Myrtle Beach, South Carolina. Your retirement account cannot purchase it from you. That would be a disqualified person, prohibited transaction. There are other family members who are also disqualified. Ascendants, so that would be your parents, your great-grandparents on up the line, and descendants, that would be your children, your grandchildren, great-grandchildren on down the line. They are also all disqualified persons. However, lateral family members are not disqualified. So that would mean brothers and sisters, aunts and uncles, nieces and nephews, cousins. None of those people are disqualified persons to your retirement account. So let's look at that example again. Let's say your father owned that vacation property at Myrtle Beach. Your retirement account cannot purchase it from your father. Let's say your daughter owned it. Your retirement account cannot purchase it from your daughter. However, if your brother owns it, your retirement account can purchase it from your brother. Not quite sure why that is allowed, but it is. There are also two entities that are disqualified persons to your retirement account. They are both companies. Any company, and it could be an LLC or an S Corp or a C Corp, but if you are a majority shareholder of that company, then that is a disqualified person to your retirement account. Also, any company, if you are an officer of that company, if you're a director of that company, or if you're a highly compensated employee of that company, then that company is a disqualified person to your retirement account. Now, we don't expect our clients to be experts in all these rules and guidelines. I tell you them here just to get you thinking, but when you are STC's client, we will review your transactions and talk with you about who you're doing business with and how you're structuring the transaction to make sure that you are not violating any of these prohibited transaction rules. So this is just kind of for your educational purposes here. Now, at STC, we do also use a particular type of structure for each of our clients' accounts. It's an LLC structure. We actually set up a very specialized type of LLC that is designed to be owned by a retirement account. So it's not a generic business LLC. Its articles of organization and its operating agreement are designed and written so that they comply with the IRS rules relating to retirement accounts. So we set this structure up for each of our clients' accounts because we believe it has significant benefits to you. First, it gives you maximum flexibility in structuring complex transactions. If you have multiple parties to your transaction, if you are going to use debt, if you're going to get a loan for a property, if you might have one party who is going to be contributing money and one party who is going to be contributing labor. Those kinds of things can be worked out simply and straightforward when you have this LLC structure. It does also provide you an additional layer of asset protection because it is truly a limited liability company. It also gives you checkbook control over your retirement funds. So that means you have quick access to these funds. You can immediately respond to an investment opportunity. We realize that in the investment world, good investments can come and go very quickly, and you need to be able to move on them. So we offer that through this LLC structure. Now you'll notice that I have checkbook control in quotes, and that is because we do not give our clients the checkbook for their retirement account. And we do that purposefully. We don't want to put you in a potentially precarious position where you might possibly engage in a prohibited transaction unknowingly. The penalties for doing that can be severe, up to forfeiting your entire retirement account. So rather than do that, what we do is we co-manage this LLC with you. We are the administrative manager. You are the investment manager. We can fulfill all of the administrative function, and that's all we can do. You fulfill the investment decision functions, and that's what you do. That permits us to review your transactions, and then before we fund them, we can ask you any questions and make sure that that transaction is in compliance with the IRS rules. Once we have your paperwork and we know that it's all good to go, we're not violating any of those rules, we can same day fund that transaction if we receive docs by 2 p.m. Eastern Time or next business day. So basically, we can fund that transaction very quickly. Plus, you have experts looking over your transaction and making sure that it complies with the rules. So I call that protected checkbook control. It's like having the checkbook, only better. This structure also simplifies asset titling. Everything that your retirement account purchases will be titled in the LLC's name. It means that you can go to closing on behalf of your retirement account LLC and sign the closing documents. Transfer of title is simple and straightforward because it's in the name of the LLC, not IRA account number 12345 for the benefit of Joe Smith. Rather, the investment is titled in your LLC's name. So it simplifies asset titling, and it also makes it easy to pool your retirement funds with other sources of funds. So let me talk just a little bit about partnering with other funds. Now I'm going to bring out on your screen 3 groups of people: yourself, your spouse, and family members, many of whom I told you were disqualified persons, that you couldn't partner with your spouse or your own money or your parents or your children. And that is true except at the inception of a transaction. At the inception of a transaction, you can partner your retirement funds with some of your personal investing funds, or with your spouse's retirement funds, or with your daughter's personal money. As long as that transaction is structured properly and this partnership happens at the inception of the transaction, you can partner with those other funding sources. Your retirement account can also co-invest with other colleagues, LLCs, investment syndications. So your retirement account does not have to have complete ownership of an asset. You could be a 25% owner, a 10% owner. That allows you to participate maybe in some investments that you otherwise couldn't fully fund with the monies in your retirement account. So you certainly can partner your retirement funds with other sources of funding to do an investment. Now here's a little schematic of our structure. You'll see on the upper left your current custodian, and when you decide that you'd like to work with us, you execute some documents that direct your current custodian to transfer or roll over the funds from your account to our custodian. While that's happening, we are setting up the LLC in the state of your choice. Once the LLC is set up and the funds have been received by our custodian, then another document is executed that moves the ownership of the LLC to our custodian and moves your retirement funds into a bank account that your LLC has access to. Once that process is complete and set up, then you're ready to invest. Now in this example, your retirement account has 3 investments in it. Investments 1 and 2 are wholly owned by your retirement account. Investment 3 has 4 owners. You'll see your retirement plan is one of the owners. Your father, your daughter, and some of your personal money is also invested in investment 3. And that works as long as you co-invest at the inception of the purchase transaction. So if you have any interest in that kind of an investment, we have many people who come to us who specifically want to do that. And we can help you co-invest with other parties. Now I want to talk a little bit about choosing an investment and some of the different types of investments that are available to you. First off, I'm bringing out onto your screen a number of different types of real estate. You can invest in single or multifamily homes, vacation investment property, tax liens, raw land, building lots, commercial buildings, real estate syndications. All of those are permissible. Mortgages and loans. You can actually purchase a real estate-backed mortgage. You can make a loan from your retirement account. That can be either secured or unsecured, depends on what you want to do. You can invest in precious metals according to the IRS guidelines. You can invest in private businesses or operating businesses. You can also expand your investments in the stocks and bonds area by investing in foreign currency, options, futures, and then of course you can always have investments in stocks, bonds, and mutual funds too. All of those investments are permitted in a self-directed retirement account. Now I want to spend some time, the next 15 minutes or so, going through some examples of investments and some actual client investments, just to give you an idea of some of the things that some of our clients are doing. Now this first one is a client investment in which the client invested in a property. It was a she had $500,000 in her retirement account with us, and the property purchase price was $330,000. She spent $140,000 to rehab the property, and she sold and increased her retirement account value by $85,000. So after that transaction was done, she had $85,000 profit in her retirement account. And she did that in under 1 year's time. Now, she is a real estate investor, but she used her expertise in real estate investing to benefit her retirement account. This is another client who purchases and rents property, investing in rental property. And they actually purchased these rentals really because they believed the properties were going to appreciate in value in this particular area. This client also had $500,000 in her retirement account, and she purchased 2 rental properties. She put approximately that full amount down, and the remainder of the purchase price she paid with, she had non-recourse loans. Now she, at the time that I last checked, was renting this for break-even plus, so she had some cash flow, and she was holding those properties for appreciation. I don't know if she has sold them at this point in time, but once she does, then all of the sales proceeds of those properties will go back into her retirement account, including all the profits that she's earned, and she is then ready to reinvest in whatever she would like. And that was actually in an area that was growing very well out in Texas. Real estate in foreign countries. This is permitted, and we do have some clients we have a client who owns a vacation condo in Costa Rica, and we have another client who has invested in a land development opportunity in Mexico. So that is not prohibited. You can invest your retirement funds in foreign countries. If you are looking into doing that, you do want to understand what the laws are in those countries, but it certainly is not prohibited from the U.S. standpoint. This is a client investment that's very interesting to me particularly. This client purchases building lots and then resells them. Now, this is an area of expertise for this particular client. He had $11,000 in a Roth account, and what he does is he researches and uses his expertise, and he purchases building lots for between $5,000 and $10,000, and then he markets those properties and resells them. In 18 months, he did 9 of these transactions, and he increased his retirement account value to over $300,000 in that 18-month time period. And then, now obviously he knows and he researched the market, and this is, he's using his personal expertise. Note that this is a Roth account. So all of those earnings, $300,000 minus $11,000, none of that is going to be taxed when he begins taking distributions because it's a Roth account. Once he had done this, then he used the cash to purchase a commercial strip mall that he leveraged, and he's now investing in other opportunities too. And we actually worked with him and his local bank to help them understand the non-recourse lending requirements for a retirement account. So but he was very successful in those transactions that he did. So just keep in mind that if you have a particular area of expertise, you can utilize that to your advantage in your self-directed account. Now this is an example investing of building lots. In this example, a builder has a 30-lot subdivision and it is 50% complete. He has experienced financial difficulties, and the remaining lots are for sale at $30,000 each. You and 4 other investors decide that you are going to each pool $100,000, so that'd be $500,000, and you're going to purchase those lots, those remaining lots. And your plan is to hold them for 3 years, and you believe over that time period they are going to increase in value, and your plan is to sell them for $60,000 at the end of that 3-year period. This is how that transaction would look. Purchase price for the 15 lots that he had remaining for sale times $30,000 would be a $450,000 investment, plus $50,000 your group would have to carry the lots, pay any carrying costs over that 3-year period. So there's where the $500,000 comes in. When you sell those lots at the end of the 3-year period for $60,000 each, that would bring in $900,000 proceeds, sale proceeds. $900,000 minus your original $500,000 investment would be $400,000 profit over that 3-year period. You divide that by the 5 investors, that's an $80,000 profit over 3 years. So you divide that out, that's a very nice nice investment return, 80% return over that 3-year period. So that's just an example of a type of investment you might want to partner with others and get involved in. This next is also an example. This is an example of a contract for sale, and sometimes these are called assignable contracts. And this is a smaller account type of investment. This retirement account has a $12,000 balance, and the individual pays $5,000 for a contract, an assignable contract, to purchase property for $200,000. And that is $25,000 below all the comps in that neighborhood. Closing is scheduled in 4 months. And so what you do is you actively market your assignable contract for a higher price. You sell that contract in 3 months for $25,000. The individual then can purchase that property for $200,000, and you have netted $20,000 on that contract. Some other types of investments that are good for smaller accounts might be options, tax sales certificates or tax liens, foreclosure sales, judgments, notes. So there are types of investments that lend themselves to accounts that have smaller balances as well. Now this is another client investment. It's an investor guaranteed loan. In this case, the retirement account is making a loan to an individual. This particular client transferred $100,000 into a self-directed account with us, and then they loaned that money to an investor for a guaranteed return of 10%. So there was a promissory note that laid out all the terms of this investment of funds from the retirement account to the investor. So you can certainly make a loan from your retirement account. The terms of that loan are decided by you and agreed upon by you and the borrower. You may want to get security for that note, and if you do get security, you will want to be sure that a lien is placed on that secured asset. But you certainly can lend money from your retirement account too. And I have attended many real estate investor associations and meetings where real estate investors are looking for money. And so your retirement account might be a good source for lending money to a real estate investor if that's of interest to you. Client investment loan pool. This is another client investment we have. This is where a client IRA, they actually contributed $50,000 to a loan pool, and this is with a company that lends money to professional rehabbers. The company has first position on the loan, so the properties that are being rehabbed are security for the loan, and the net earnings on these loans are then paid to the retirement accounts quarterly. Now, the last I checked on that, it was a couple of years ago, it was earning a little over 12%, that particular loan pool, so that might be something that you would be interested in looking into. This is another very interesting, different kind of client investment, oil and natural gas drilling. Now, this was a retirement account. The client invested $35,000 in a syndicated oil natural gas drilling project. Syndicated meaning a drilling company put it together and gets investors for the project. In this particular investment, the company was doing 5 drills. There would need to be an additional investment between $5,000 and $10,000 to cap the well if there was a strike on the drill. And the investment would be lost if no oil or gas was found. So there is certainly risk involved in this, as there are in all investments. If there is a strike and if it is a producing well, then the investors receive royalties on producing wells. This particular client, in this particular investment, they had strikes on the first 2 drills. So they had to invest some additional money, and now they are receiving royalties on the production of those 2 wells. So something else you might want to look into if that's of interest to you. Now, sometimes people ask me, is there any way that they can help a family member and at the same time benefit their retirement account? And certainly there are some ways that you can do that. And this example investment is an example of one. This would be a loan to a family member. Now, in this case, it's a loan to a cousin. Remember that ascendants, descendants, and your spouse are disqualified persons, but lateral family members aren't, and that would include cousins. So this is a loan to your cousin to purchase a home. She recently divorced. That's kind of upset her financial situation. She can't qualify for a loan at this point in time. She needs a couple of years to get back on track. So she's found a house with a purchase price of $150,000. She does have 10% down from the sale of her prior home. You checked out the neighborhood. You think it's it's going to have good price appreciation. So you are willing to lend her interest-only loan, 8%, principal due in 2 years, secured by the real estate. That loan would give you $11,000 interest per year, and you'd still have the security of the real estate. So if she was unable to pay, you could foreclose, and then your retirement account would own that property. So it is possible to benefit your retirement account and to benefit a family member as well. You just need to make sure that it is an arm's length transaction and it does not involve a disqualified person. Now, this is an example investment of investing in a private business. In this example, you are funding the expansion of a furniture business. Let's say your neighbor has a profitable furniture store and he wants to expand. He needs money for inventory and working capital. You decide that your retirement account is going to invest $50,000 for a 1/3 profit interest in this new store. Now, he's already got a profitable store. He knows how to run a store. It's profitable the first year. It makes $100,000. Your retirement account would earn $33,000 a year. 5 years down the road, you decide, or he wants to buy you out of this profit interest, so you sell your interest for $75,000. You would have had earnings of $190,000 over that 5-year period. Your account value would have grown from that initial $50,000 investment up to $240,000. So you certainly can check into investing in a private business. You do want to also ask just make sure that UBIT, unrelated business income tax, is not going to be triggered. In this case, this is kind of a loan for a profit interest, so depending on how that was worked out, that may not trigger UBIT. But you would want to investigate that before making that investment. This is another client investment. It's a group investment. This is with a syndicator who purchases properties throughout the country, and what he does is he sets up LLCs or partnerships with small groups to invest in these properties. They are usually mixed-use buildings, meaning they probably have retail on the lower level with residential on the top, and investors invest anywhere from $100,000 to $120,000. And that way you can invest with a group. Maybe you could invest $20,000, and that would just invest a part of your retirement money so that you had remaining monies to diversify into other investments. So this particular fellow usually does 5 partner investors. You can find group investments or syndicators of investments in many different ways, but this is just an example of one that we have had some clients invest in. This is another developer investment that some of our clients have participated in. This is a developer who purchases high-rise buildings in metropolitan areas, and what they do is they convert those properties to condos. And so as an investor, you would actually buy one of those condos for rental. Now, the investment amount on these is pretty high, $200,000 up to $1 million. You could pool funds with other investors to co-own one of these condos for rental. And this particular developer happens to have investment programs ranging from 18 months up to 3 years. So you may be able to find different kinds of real estate syndications that might be similar to this or have some different kinds of variables that you might be interested in investing in. This is a loan pool investment. Oh yes, this is a syndicator who pools investor funds to create a loan and then lends those monies to developers of raw land who are going to put a development there. So they actually make a loan to a developer, and the loan is secured by the land. This particular investment, this has been a few years now ago, the minimum investment was $25,000. At the time I checked it, it was earning 15%. So a loan pool is a possible investment as well. So those are just to give you some ideas of some of the different things that you might want to think about investing in. I want to take just a moment now to run through our services, and then we're going to go answer your questions. I did receive a couple of questions prior to the webinar, and then I will answer all of those that you type into the question box. So first, let me go through our full service approach. We do set up the account LLC structure. We complete that entire process, oversee the movement of the funds from your custodian to our custodian and the movement of the funds to the bank, set up the LLC for you. We offer that protected checkbook control I mentioned. We have CPAs and attorneys to answer your technical questions. We offer unlimited guidance on transaction compliance, so you can call our customer service department as often as you need to, and they'll help you understand how to set up your transaction so that it complies with the rules. We handle all that back office administrative support I mentioned. We prepare financial statements for your retirement account LLC that you receive quarterly. You also have access through an online system to see what your cash balance is and to see a cash flow report. We supervise the regulatory reporting, and we oversee that annual valuation. So basically, we cover all of the administrative requirements for your retirement account to really free you up so that you can really focus on the investments. You can focus on finding the best investments for you and what you want to do in your retirement account. Now, I'll just quickly mention that it is very simple to set up an account with FTC. You basically talk with your FTC representative. If you don't know who that is, let me know and I can tell you. I'm also a representative, so I'm happy to talk with you too. We would review your current retirement accounts and discuss what you wanted to do. I'd answer all your questions and then just complete a simple set of paperwork. So pretty straightforward. Basically, we'd like to know how we can serve you. You may know at this point in time that you'd like to open an account. I'd be happy to talk with you about that, and we can get you the paperwork right away and get you started. You may also have clients or colleagues who might be interested in self-direction. We'd be happy to get them information if you'd like to let us know how you'd like us to communicate with them or give you the information for them. Or you may simply need more information yourself. Any of those situations, you can contact me. You can get more information on our website at stcira.com, and our corporate number is on the screen there for you. So please do get in touch with us. We'd like to help get your questions answered and help you get started with your self-directed investing. Now I'm going to take just a moment to open up my question box and check out the questions that have been entered there. And let me make that a little bit bigger. Okay, first let me start with the questions and comments I got prior to the webinar. Okay, one individual is interested in using his self-directed retirement funds to purchase timberland for investment. As far as I know, there shouldn't be any problem with that type of investment. Land is certainly a permissible investment in a retirement account. You would, of course, we would need to see who that was actually being purchased from, the company. Were there any disqualified persons involved in that company? To what degree were they involved? That kind of thing. But timberland should be an acceptable investment for a self-directed account. The next question, I'm a real estate broker and investor, 67 years old. Would like to know if it can do self-directed in Destin, I guess that's Florida, in my retirement home. I also want to know more about, okay, so I'm not exactly sure what the question is. You can certainly invest in property in any state in the United States. So if you wanted to invest in property in Florida, that would be great. I just want to be sure you do understand that you cannot already own that property and then have your retirement account purchase it. And if you do purchase, if your retirement account does purchase in a property in Florida, you can't go and use that property. Like you couldn't go and spend the winters there in that property that's owned by your retirement account. That would violate that disqualified person rule. Remember, you and your retirement account are disqualified persons to each other. So just have to be careful along those lines. You couldn't use that. Okay. Is a mandatory IRA distribution based on total assets or cash in hand or equity? Okay, I believe the individual is asking about the required minimum distribution. That's the only mandatory distribution from an IRA. When, in the year that you turn 70 and a half, you are required to begin taking distributions from your retirement account. It's called an RMD, a required mandatory distribution. And the individual is asking, how is that calculated? What balance is that calculated on? And it's basically calculated on the value of the account. So if your account includes cash and property and a loan, the entire value of that account will be used in the calculation for RMD. And if it owns a property, a piece of real estate, that real estate will need to be appraised, and that appraised property is what will be used as part of that calculation for the RMD. So I hope that answers your question. Oh, along with that, let me also mention, because so many people have multiple accounts, the RMD is calculated on all of your accounts combined. So all of your account values will be added up, and then it's actually a percentage calculation based on an actuarial chart, depending on your age. So I can't tell you the exact calculation, but your accountant can, and that is based on the account value at 12/31 of all of your accounts. Okay, let me see here. Make my box bigger so I can read these questions. Okay. Can you get a mortgage against your self-directed IRA? Basically paying 20% down on a property, using self-directed, and get bank to finance the balance. I'm not exactly sure I understand that question. You cannot use your retirement account funds in getting a personal loan to personally acquire property. That you cannot do. Now, if your retirement account is purchasing the property, of course you will be using the funds in your retirement account, and your retirement account can get a non-recourse loan. I will tell you, though, that non-recourse loans are going to require a larger down payment than 20%. It's probably going to be a minimum of 30%. That's pretty much industry standard. So your retirement account can purchase a property and get a loan to purchase a property, but you can't personally use your retirement account funds to purchase a property that you own personally. If I didn't understand your question, please give me a little more detail. This is an LLC question. I will read it and see if I can understand it in order to answer it. Setting up the LLC for my account and have several properties. Well, first off, let me mention that the LLC that we set up is designed to be owned by a retirement account. It becomes the investing vehicle for your retirement account. Now, so then the second part of this question is, if there is a suit against one of the properties, how much exposure of risk to the other properties? Okay, so what I'm gathering is this person wants to own several properties in their retirement account LLC, and they are wondering if there is a lawsuit brought against one of those properties. Are the other properties at risk? Is there any insulation against the lawsuit for the other properties? I will tell you that I cannot answer that question. That is a legal question, and that would be a question for your attorney. So I do apologize, but I am not permitted to answer legal questions. Now that I've read that, I can see that's what that is. Okay. This is a very good question. If I have a Roth and also a 401k, would they be two different LLCs? Yes, the answer to that is yes. And the reason that is yes is because they are two different types of money. A Roth account is pre-tax money. Other accounts, a SEP, a simple, which is what you would roll over 401k monies to, or a traditional IRA. Those are pre-tax monies. I'm sorry, Roth is post-tax, the other accounts are pre-tax. So those monies cannot be combined in an account. They cannot be combined into the same LLC. That would violate the rules. So you would have to have two different LLCs. And what we do is, for any clients that have two different types of accounts and set those up with us, we do give you a discounted price on the setup, because we realize that you do have to have two different LLCs to accommodate both of those kinds of accounts. Okay, I'm interested in finding sources for non-recourse loans to purchase Maryland real estate. We cannot recommend particular lenders to you, but we do know that there are companies, self-direction and in real estate investing in retirement accounts is becoming more and more common. So more and more lenders are offering non-recourse loans to retirement accounts. So I would recommend that you do some research online and do some due diligence in vetting different lenders and finding out what their requirements are. But there certainly are a number of lenders who do offer non-recourse loans to retirement accounts. Let's see, I had some more questions here. How long does it take to get my account set up? We do ask for 4 to 6 weeks. We do that because it does take time to get the funds moved from your current custodian. Some custodians have longer processes to move the funds. So we do ask for 4 to 6 weeks. Oftentimes setup is much quicker than that. Once your account setup is complete, then you have that same day or next business day funding of your investment. So it's just the setup does take a little bit of time because we do have to create that LLC and get the funds moved and such. Can I open an IRA if I'm over 60? And what is the minimum initial deposit? Yes, you can open a new account. I'm assuming that means you don't have a current account. You can open a new account as long as you're not 70 and a half by the end of the year. So once you reach 70 and a half, then you cannot open an account any longer. That's when you're required to begin taking distributions. You do have to have taxable compensation during the year in order to make a contribution. The minimum amount to open an account with us is $250. Let's see. Okay. If I want to put IRA money into a self-managed stock brokerage account, can I? Can I actively trade in that account with IRA funds? Yes, you can. You can open a brokerage account with any company that you choose. The account does have to be opened as a business account, and it does have to be opened in the name of your IRA LLC. So the LLC is going to be the name on that account. It can't be in your personal name. And then you would need to send STC, you'd need to send us copies of your monthly statements because we need to make sure that you are not making any deposits or taking any withdrawals from that account personally, because that would violate those prohibited transaction rules. But yes, you certainly can do that. If my funds are in another self-directed IRA, is the time frame for setup the same as traditional IRA? It really, that's back to the time for the setup. It really depends on how quickly your current custodian will move the funds. And we expedite all the pieces of that we can. We do work with a particular self-directed custodian who's very familiar with our work, so we can expedite those processes with them. But the big part is setting up through the state of your choice, the LLC. So that is dependent on the state and also your current custodian. Those are the two things that we can't control. So we do keep you apprised of the setup as the process goes along. We actually keep in touch with you via 3 emails. We send you an email as soon as we receive your paperwork to let you know that we have it in-house, we've started working on it. We then send you an email when the funds are received at our custodian. We send you an email when the LLC setup is complete, and at that point in time, when both of those things have happened, then your account setup is complete. We stay in touch with you, and you can contact us at any time. You know, we do ask you, if you know that you want to work with us and you are already starting to look at investments, please do get the paperwork filled out, you know, so that we can expedite that process. We don't want to hold up your investment. But we can't, you know, guarantee that, you know, we can have your account set up in 1 week so that you can invest in something. Okay, it looks like I answered that in question correctly. Thank you very much. Okay, okay, that was just a comment. So let me see, I've got just a couple more questions. Oh my gosh, it's 8 o'clock. Okay, I am sorry that I did not get to any more questions. If you do have some more questions, please do email me directly. My email is on our company website, stcira.com. Look under our team, you'll find me and you'll find my email address, and I will be happy to answer your questions one-on-one or talk with you personally. Please do get in touch if you are interested in working with us. We would be very happy to assist you. I do hope you will join us for next month's webinar. That will be on Tuesday, January 10th. And if you received an email invitation to this webinar, you will likely get one to that as well, or you can always register on our website. Thank you so much for joining me this evening. It was a pleasure. Everybody take care and have a good evening. Good night.